Ladies and gentlemen, a first panel discussion that strikes at the core of today's India's retail challenges and opportunities. In an era of unpredictable consumer behavior, shifting capital flows, and rising pressure to deliver sustainable returns, retailers are being called to reset. The question is, how do we fuel growth, manage capital prudently, and still keep long-term profitability in the focus? To explore this critical balancing act, we have brought together a powerhouse panel of retail leaders and strategic thinkers, individuals who have navigated volatility, embraced innovation, and redefined resilience in their businesses. So let's get ready for a conversation which is filled with hard truths, bold ideas, and sharp insights. I'm sure our audience are ready to begin with the first panel discussion of the day. The very first, I would like to welcome our moderator, Mr. Bijou Kurien, Chairman, Retailers Association of India. Let's put our hands together. Our first panelist for today, Mr. Devarajan Iyer, Executive Director and CEO, Lifestyle International Private Limited. Next, we have Mr. Manohar Chatlani, MD Retail India Private Limited. Next, we have Mr. Shaji Varghese, CEO, Muthoot FinCorp Limited. And last but not the least, ladies and gentlemen, we have a last panelist, Mr. Subhash Chandra L, MD and CEO, Sangeetha Mobiles Private Limited. Let's put our hands together once again for all the panelists and the moderator, because this is going to be a very, very amazing session, and I'm sure it's going to be very insightful for all of us. Now, I may wish all the best for a panelist, and I would request the moderator to please begin the further proceedings. Over to you.
So thank you very much for those introductory remarks on the session. I have here renowned experts in the retail business. So there is nobody better than this group to be able to address the larger structure of what we were discussing or what was presented as an introduction. Kumar talked about population, and we are about 141 crores in terms of population in India. And for us, population should translate into potential. However, we know that we consume about a third of what the average Chinese consumer consumes. We consume about a tenth of what the average American consumer consumes. So we know that there is an opportunity for us to be able to grow in terms of consumption. So that is one. If you remember what I mentioned about the penetration of consumer durables, the level of penetration of several consumer durables, and similarly like that, if you were to look at several other categories, in India is much lower than what it is in other parts of the world. Certainly also if we were to compare ourselves to markets like, leave aside China, but markets like Indonesia, Malaysia, Thailand, we still are much lower. In terms of the number of retail outlets, of course we have a much larger number of retail outlets than most of the countries in the world, at about 13, 14 million. But if you look at the average retail per capita space in India, it's much lower than any other country. So the amount of space available for retail in India compared to China, compared to the US, compared to smaller markets like Singapore and Malaysia, leave aside Europe, you will discover on the average per capita basis, we're also much lower. And all of that is translated into the fact that traditional retail still contributes to about between 75 to 80% of India's retail market. All of us who might be calling ourselves as modern retailers still are a very small part of India's retail basket between 20 to 25%. So the large thought here is that as we build retail businesses, and when we start building chains, we build businesses, how do we ensure that we can build these businesses sustainably? One, which means it's got to last from year to year. We have to build it profitably, which means that you should make enough money to be able to pay your suppliers and to pay your employees and other service providers. We've got to make sure that in a competitive market, we also build it competitively, which is why should somebody come to my store as opposed to going to any other store. So there are several factors like this that we have to take into account when building our businesses. So what I'd like to first address is the question of channels. And when I'm talking about channels, what I'm meaning is the way the consumer can reach the retailer. The consumer can reach the retailer by walking in the street and coming into a store. Can reach the retailer by actually looking at their phones and ordering something on an e-commerce platform. If they want it very quick, they can do it on quick commerce. There might be ways on which you have multi-level marketeers being able to reach the product to the consumer's home, like say an Amway or an Avon or people like that. So there are several ways in which products reach retailers, reach consumers. So I just wanted to start with the question of channels, which is the way you can reach your consumer. And I'd like to start with Subhash, who's the chairman, incidentally, of the Bangalore chapter of the Retailers Association of India. So Subhash, you're in the mobile phone business, a business which you've built assiduously over so many years. And today mobile phones are bought both online and offline. At one point of time, they were only bought offline. And ever since they introduced in the market in the early 90s, 93, 94, people used to come to stores and buy phones. But then once online came in, they also started buying from e-commerce channels. So when you think about, let's say, how do you adapt your business to the challenges that you face between from the online competitors? What are some of the things that you have done in order to be able to defend yourself?
Well, good morning, everyone, once again. Thanks, Bijou, for the question. Yes, I think it was Bangalore went mobile in 96. And Sangeetha was fortunate to be the first retailer of retailing mobile phones with a bill and warranty in the entire country, not just in Bangalore. So, yes, things have changed. 1974 is when Sangeetha was born. So, for the first 25 years, we were single store. So, the demand that we saw in the mobile business made us think about expanding. And when I wanted to expand from JC Road was a very odd road for selling a mobile phone. Okay, people used to come from far and wide, much beyond Bangalore also. We used to have customers coming from other towns as well. So when I wanted to expand, I was thinking of opening a store in an MG Road or a Brigade Road. And there was a lot of resistance at home. You're doing so well, why expand? The previous generation, dads are always conservative. Then, from then to now, 2001 when we opened the second store, then we expanded into other cities, other states. Today we are there across 7 states and 800 stores. But, thank you. But yes, one thing I regret a lot in my life is that I could not get onto the e-commerce train well in time. Though we did have our website and we did start online transactions, we enabled more than 10 years ago, I think, or probably more than that. Somehow, we didn't give it enough mind share. We didn't take it as seriously as it should have been. So, obviously, we have paid the price for that. Having said that, we didn't want to miss out again on the quick commerce. So in the last about 3 years, using our infra of 800 stores, 3 years back we were around 600 stores. So we started 2-hour delivery. We had a lot of challenges to fulfill the 2-hour deliveries. There were some customers appreciating us. There were some customers who were annoyed with us. But after a point in time, we said, especially when iPhone 16 got launched, and when we heard that Big Basket delivered in 10 minutes, so then we said that, something glue in our mind, and we said, no, 2 hours is going to be outdated. Of course, Blinkits and Zeptos were already there delivering in 10 minutes all the groceries, but we never expected mobile to be delivered in 10 minutes. So once Big Basket and Blinkits did it for Apple iPhone 16, then we said, no, let's change our thing. And in October, we introduced 30 minutes delivery. Today, across probably, in 400 towns that we are there, we are delivering in 30 minutes. Though the number of orders are still not so massive or huge in number, I must tell you that we are doing quite well. And it has enabled us to think beyond the physical stores that we are there. And the rest of the country we were delivering in 1 day. But we want to be there, obviously, because the window that is available for us, the others are, they already have got their act right. For them, it's just of adding another product, right? Another mobile is just one more product. So, as of now, we have added Mumbai. In Mumbai, Sangeetha physical stores are not there, but we have dark stores, and we are delivering between the last time that we met in Kerala and now. We have added Mumbai, we have added Delhi. We are delivering there in 30 minutes. And Kerala, finally, I got the GST number thanks to our Kerala summit that we attended. And we will be starting off Kerala very, very soon. So yes, different channels, a must. You have no choice. You have to be there.
Just an add-on question. Mobiles are fiercely competitive as a category. And the competition is between online and offline in terms of pricing. So how do you address that issue through your stores?
Thanks for that question. I have a fight with different teams in the head office every day. My online head says online customer is a different customer, he wants pricing. And I have to be competitive. And my offline team says, how can our own website sell cheaper? How do I compete at the store? What do I answer? So there is a fight going on every day in the head office. So my half the energy goes in, balancing the two teams. But having said that, my head of omnichannel, who would be here maybe, or in some time he should be here, he says, there's a lot of sanity that has come about in the online space as well. The big names that are there are no longer discounting or bleeding the way they used to. So in fact, today it is more about, erasing that impression in the customer's minds that online is really dead cheap. It's not that dead cheap. In fact, the difference between an online and an offline is hardly 2 to 3%. And we have empowered our store guys. The store guys are empowered. They can give that 2% discount and close the sale if they wish to.
Good. Devarajan, a question to you. Lifestyle started now, I think, about close to 26, 27 years back, and started with the department store format. But what we are seeing today is that retail has moved beyond stores, moved from stores to online. Large stores have also now coexist with smaller stores. What used to be a large city phenomenon has now started going to smaller markets. So if you go to small markets in Kerala, Andhra, UP, etc., you'd be sometimes surprised to see national brands in these kind of markets. What I wanted to understand from you, and certainly the audience would also like to understand that, is that in terms of potential, you know, how do you evaluate the potential and the opportunity to be able to expand your network, to be able to address the small town customer? And how much of a difference do you see between them and the large town customers, both in terms of the kind of stuff that they buy, as well as the prices that they can afford? Why I'm asking this question is because we all believe that India is a market with a lot of potential, and hence, while we have a population which is very large, a lot of us retailers are only focusing on the top set of cities, and there's a large group of the population which is still unaddressed.
Yeah, so in fact, it's interesting that you asked this question because that's one of the key levers of growth for us going forward. So many of you are perhaps already familiar with Lifestyle. It started off in 1999. For the first 20 years, we were more of a metro store. Till 2021, 2022, most 95% of our stores were in metro cities, the top 7, 8 metro cities. Bulk of our revenue came from these metro towns. And we were fundamentally a very large format store, 55 to 60,000 square feet store, present in all the key marquee malls in the country. And then we realized there are, see, for a brand like Lifestyle to expand, it's very critical for us to get the right retail environment. We can't just go to a town and just set up a store. We need the right retail environment in terms of fashion, in terms of affordability, consumer segments, and then we enter that market. When we said, where is the growth going to come from in the next subsequent, the next decadal growth, we said there were two opportunities. One was digital, like we discussed just now. Digital was exploding at that time, still continues to grow even now significantly. And the second growth has to come from the tier 1 and tier 2 towns, because that's where the consumer is. Because if you look at the Indian population of 145 crores, close to 7% is in the top 4-5 metros. The remaining is actually, in the other tier 1, tier 2 towns. So if you're going to be in India, if you're not in tier 1, tier 2, you're not in India. So that's when we said, how do we embark on a journey in tier 1, tier 2 towns? But then our format was very different. We couldn't imagine Lifestyle opening a 50,000 square feet store in a small market like a Trichy or a Madurai. So we had to innovate. We spent close to 6 to 9 months visiting various tier 1 towns across the country. We met a lot of consumers. The first 6-9 months was just understanding consumers, understanding spending patterns, the difference between brands, And then we said, we can't take a 50,000 square feet store to these markets. So we had to innovate the box itself. So we arrived at a 25,000 square feet format. And we just didn't squeeze a 60,000 or 25. It was not proportional. We actually removed a few categories. We actually removed a few departments. We curated our brand mix. And the good thing about Lifestyle is we've got a good mix of brands, external brands and private brands. In these smaller towns, our private brands play a slightly larger role because in terms of fashion, in terms of affordability, they are much more relevant in these segments. So it's a combination of playing with the relevant brands, the role of private brands in these markets, looking at what is the return on investment and then return on capital employed, because it's a very capital intensive business. Our spends are significant to set up a store. It's a very large format store. So what is the return on capital employed? What is the return on investment? And what is going to be the sales density that's going to happen in these? Because in a metro, I can afford to pay a far, far higher rent because the sales per square feet is significantly higher. Now in a tier 1, tier 2, the rentals are of course significantly cheaper, but that's very misleading because the sales productivity is also significantly lower. So if you look at rental as a percentage of top line, both may look similar, even though the rentals are cheaper in tier 1, tier 2. So I think one has to be very careful of the business model and financial model that you're going to enter the town with, so that you protect your capital employed, you protect your return on investment. And then, of course, the entire thing about curating the brands that you go with, what is the role of private brands in these markets. So it's a mix of financial model, business model, real estate strategy, and brand and private label mix.
Just an add-on question from a customer segmentation perspective. You all have architected retail formats to address different customer segments. So what has been the strategy behind, say, Max and Easy Buy?
So if you look at India, we believe we are in all the right segments, because India's got a premium segment, but that segment is not very large. Then you have a value segment, and then you have a super value segment. If you look at the growth that has happened in the last, I would say, 6 to 7 years, we are seeing a huge unbranded to branded movement happening. A lot of people who were just buying regular clothes, maybe on the streets or in the corner shops, are moving to a much, much sophisticated, more pleasurable, better experience in the store. For example, if you look at Easy Buy, it's a nice store, it's air-conditioned, there are well-laid aisles, there is a nice cash counter, there's a trust. So, but the prices are the same. The price of a t-shirt that you pay outside and the price that you pay here is similar. So the entire store promises we're going to be less than 999. So, and then we have Max, which is the little more conscious, brand conscious, little more, a consumer who can afford a little more, especially for women and kids. And then on top of that, you have lifestyle, which is mid to premium. So we're straddling all the segments in the country, so we don't lose out on any segment.
Good. So your point is largely that India is comprised of different customer segments, and you can't have one single model which can address all of them. If you want to really be playing in India, you've got to have different formats. Manu, a question to Manohar Chatlani is one of the veterans of retail in Bangalore. So a lot of you all from Bangalore will know him from his one store which they started first in Commercial Street, which was called Favorite Shop. And I still remember when I was in school, if you wanted to buy some clothes and you went to Favorite Shop, especially when they had a sale, then you had one queue which was, halfway of Commercial Street in order to be able to enter the shop. And they'll send you in batches into the shop to prevent the stampede situation which happened recently. And then they'll quietly move you out through the back door. So, Manu came from that business, but of course has built a great branded business with Soch. And Manu, I wanted to address one point with you, which is the role of price in buying garments, one. And the second is that, my remembrance of Commercial Street in the early 70s, where there was not a single branded store, to today, where it is predominantly branded stores. What has led to that change between then and now in terms of the larger apparel industry?
Good morning, everybody.
Yeah.
Good morning, everybody. I'm probably the oldest person in this room. I'm 73, and I have been in retail. No? Anybody else over 73? No?
Anybody over 73 in the room? No.
Okay, I have been in retail for now about 53 years, and I have seen the changes. One huge change which I see, probably from the time I got into retail, for the first 40, maybe 45 years, same store, year-on-year growth was a given. There was no question about it. Every year your business goes up by 10, 15%. If it's a good year, 20%, bad year, 10%. Today, that is the biggest challenge we are facing. You spoke about the old Commercial Street and the new Commercial Street. We had a store on the ground floor and first floor of Commercial Street, and we used to live on the second floor and third floor. And on Sundays, we would come downstairs and play cricket on the street. And by chance, if a customer happened to come, we would go in at a 10 and go back and continue the game. So day and night change between then and now. Of course, it's just not commercial street. It's the commercial street used to get customers from all over Bangalore. Anywhere in Bangalore, you want to do shopping, commercial street. When we started selling salwar kameez in ready-made lady salwar kameez in 1975, there were 2 stores selling salwar kameez, us and Fazil's. Today there are about 80. And if you have 80 stores selling on the same street, if you have 80 stores selling that product and you are doing well, then you're doing something right. So the competition has become much, much more intense. And of course, the pricing, you mentioned about pricing. There is a lot of pressure on pricing. But we are not in that, neither in the value nor in the super value game. So luckily, there is not that much of pressure on pricing for us. It is more of a perception. It's how you present the garment, your look and feel of the store, the service, basically the experience. If you can give them good experience, definitely you are able to charge much more than somebody on the same street selling something very similar. You have your just printed rayon tunics selling at 500 rupees and at 1500 rupees on the same street. It's just different ambience. And as you mentioned, the shift from unbranded to branded, a customer doesn't mind paying a little more where he feels that this is a good quality. I think 30 years back, nobody would have thought that you can sell a coffee for 300 rupees. Today, Starbucks is doing it across the country in hundreds of outlets, right? And there are even the new brands which are selling them even more expensive. So business has changed, expectations have changed. It's not the same old business. When we had the half price sale, we started in 1970. There was nobody in the city having a sale. Everybody used to get their goods, sell, and the margins in those days were 33%. So most probably couldn't even afford a sale. We started buying stock lots at that time and having this sale, which is why there was a queue. Almost every sale there used to be a queue. And in this 1 week, we used to do about 3 months business. So those days were very, very different. Right.
So about price points. What we are seeing today is that, I think even Devarajan mentioned that, in the price point which is sub 1,000, which is triple digit price points, we are finding that the traction is very high. Why is there this change between, earlier if somebody wanted to buy a formal shirt, they're quite willing to pay 1,500, 2,000 rupees. Today, nobody wants to buy a shirt at more than 1,000 bucks. They think, why should I pay more than 1,000 rupees to buy a shirt when there are several brands available who are willing to give it to me at less than 1,000 bucks? So what do you think is the reason for this change in the consumer behavior, even in the context of, categories which are quite popular from the past?
For me? Okay.
Yeah.
I think one is the online. When most people do online shopping, I think probably 80% of people have either do it or experiment or have done it. And when they go online, they see a branded shirt, which is available at 999 or 1,200 rupees. They're obviously very reluctant to walk into a store and pay 2,500 rupees. Of course, it may be last season's merchandise, but it really doesn't matter. If you're wearing a basic formal shirt, if you're wearing a casual shirt, which is checks, which is very similar to what is selling, I think fashion doesn't change as fast as we think. The same, as far as formal shirts are concerned, you divide them into plain, stripes, checks, right? This is the same thing which we've been selling for the last 20 years. Casual shirts, yes, a little bit of change is there, but you've got your same checks. Practically 60% of your casual shirts are checks or, some plain fabric. there's not such huge change. So a customer says, hey, what is the difference? Why should I pay so much?
Devarajan, would you like to add to that?
See, what's happening is it's not as if customers have moved down to the 1,000 rupee shirt, because we sell very premium shirts and all the brands are growing in our store. But what has happened, like I mentioned earlier, is a lot of unorganized is moving to organized. Because in the unorganized sector, you will buy a shirt for 500, 600 rupees. Now the same shirt is available for 800 rupees, you're just paying 100 rupees extra. And in a far better environment, in a mall, with all the infrastructure and all of that. So I think that has changed significantly. So it's not as if the premium is getting cannibalized and they're sort of downgrading themselves, but the unorganized, and that's a massive multi-billion-dollar market opportunity. I think when that starts converting to organized, the organized retail is seeing a huge, huge upside.
Yeah. Just for statistics reasons, the unorganized in the apparel industry is about 2/3 of the market, and the organized amongst the brands and retailers is only 1/3 of the market. So I think, as Devarajan mentioned, just that shift itself can make a huge impact. We have Shaji Joseph here. Shaji is the CEO of Muthoot FinCorp. And as many of you all know, Muthoot, the family, of course, between the two branches, is involved in, is an NBFC and is involved in the finance business, most largely the gold loan business. And many of you all might wonder, what is Shaji doing in the midst of all these retailers? And Shaji himself wondered, what am I doing in the middle of a lot of the retailers? But I think the larger role that finance plays in retail businesses today, and just to give you a little bit of a background, in many retail businesses, it's considered as trade. It's not considered under priority sector lending for the banks. A lot of it is working capital. Historically, retailers have written down assets, but most of their monies are in terms of inventory. And in many cases, it's also sometimes negative working capital, because the credit they get from suppliers is sometimes a little more than their inventory investment. So to that extent, they have some amount of a benefit. But if you're in an expansion mode and you're opening more outlets, you've got to add new inventory, you've got to wait for sales to happen, obviously you will need a lot of fresh capital. So one of the roles that NBFCs, which is not the traditional banking system, can play is in terms of the way they can assess and customize solutions for specific needs of retailers. And what I'd like Shaji to do is just talk about how NBFCs can assist retailers, whether it relates to inventory financing, receivables financing, new bills in terms of stores, and customer financing to enable us to improve our sales. Those aspects will be very useful for us to understand.
Okay. Thank you. Thank you, RII, for inviting me in the midst of the retailers, as you said. Thank you. But though I'm not part of the RII, but of course, people like us, we are also part of the industry stakeholders and of course the enabler in the whole scheme of things. Before I really answer, I just want to take one step behind just to tell, where are we standing on the credit and credit penetration to the retail space. When we look at some of the data points, we have around 6 crore of Udyam registered SME and that space, MSME. What I understand is that you know the number better. Around 13 million are the retailers. Needless to, in that, of course, I think I just heard the number, what percentage is the formal and organized and the modern, I think is part of it. Only less than 20% of they have access to formal credit. Now, that really throws a challenge. Now, there is also, I'll take one step behind again, not the question is around retailer, but the access to credit and the customized offer is much beyond the requirement of the nation. I'll take a minute to explain that. There is an India context to this. Look at how the journey we have traveled. When we got independence, our literacy rate was 12%. Now we have reached almost, we know the number, coming close to 80. There's a context to what I'm saying this. The child mortality used to be around 150, close to 200. Now it is much lower, maybe 17, 18. The life expectancy, 32 age now is gone up to 74. But when it comes to the access to credit, still there is much, much lower. So if you look at many nations across the world, small countries really develop large economy. The access to credit is a very important part of it. So what are we doing it and what's happening around the space? See, there are 2-3 things. One, there's a challenge, there is a customized offer. The question is around customized offer. Having said the large share of more than 80% eligible to get credit is not accessible, what are we doing about it? We have identified 3 different requirements for the retailers. One is that short-term credit to meet their credit cycle. The challenge is many of them don't have the conventional documents which the bankers are asking, ITR and tax returns and balance sheets and so on and so forth. How do we underwrite them? We have now 3 ways approach. One for the short-term credit. India upon a time was a data-poor country. Today we have become a data-rich country. We have now access to the behaviors of the shopkeepers through the QR code and the UPI payment. We have gone fully automated. Somebody with this transaction history can get a short-term credit from us without a human intervention at all. We do that in huge number across the country. If you go to app like a PhonePe or Bharat Pay, there is a loan option there. We are the kind of people who supply credit to those shopkeepers. In few minutes, seamless, the credit happens. And it is customized. It's not that conventional way of force-fitting a product to, EMI and do for a few years. Because their credit cycle is very different. They really don't need that credit. They need a very different credit. You can take today, pay back tomorrow, through an online, only those days the interest is charged, you can always take a top up. This is one side. Second is a trade modernization, or somebody who wants to start a new shop or a franchise in expansion. How do we deal with the credit modernization? It needs a long-term credit. Loan against property is a solution. Longer tenor all the way up to 15 years. But the challenge again, how do we underwrite these folks? They don't have tax returns. So we have different models. We have a touch and feel model because company like ours having almost 3,800 branches. So we go touch and feel, understand, Perchi and all those, we do that. And they have digital footprint now. We do use that. The third is, which is the largest part, a distributor to dealer, the end to the B2C. Now B2B, who is funding in India? The largest financer of B2B are not the banks. It is the distributor who is funding. Okay? And look at the cost of that credit. We had some conversation with some of the retailers in India while we wanted to make this product. 7 days, 2% is the indicator rate, if I'm understanding right, sirs. Either you get a discount of 2%, okay, that's a credit cycle. You calculate per annum, that is more than 150% interest rate. That's a cost. And that is paid to somebody else. And eventually the distributor may lose money also because they are not an expert of lending. Now we are trying to bridge this gap. Supply chain finance is available for the large brands up to a distributor. But the real requirement is in between distributor and the dealer. So we have now developed, supply chain finance for this space. We do that in large scale, okay, across the country. I don't know, we have not reached to you. We can always have the discussion. And we are always open to customize these products, the need of the specific sector. The fourth, of course, we also have customized product from the gold loan space. That's again a very interesting stuff. One could just take a loan based on the value of the gold, no ITRs, no credit history, nothing. It's little lenient. One could, no processing fee, no prepayment charge, no hassle. If a credit cycle is 7 days, you pay back, next day you can take a top up through the app as well. So we have created that, environment. The year gone by, the group, we would have we have supplied a fresh credit to the market around, more than 70,000 crore. That's the kind of scale we could reach. Our large majority of our consumers are retailers and the end consumer. So a lot is happening here, sir. Okay? A lot is happening is the fact. A lot of innovation is happening. So, go do business. We are there to supplement. That's all I wanted to say. There are a lot of consumers, loans are getting denied for various reasons. Any sector had a good penetration. Look, automobile. Okay, we talked about a lot of price points here. 1,000 rupees has become a price point. Can we discuss now how can we make EMI as there? Today, which car is sold at full price? It is sold always in EMI. I think a lot more we can work together and make it. So there is an opportunity for us to collaborate, and it's so important to work with retail. Why did I also be here? Let me also tell you, the large, can I take a minute more?
Yeah. Certainly.
Okay.
And Subhash will add after that.
Okay. The large grand plan of India, by 2047, we want to become a developed nation, right? So, where is India standing today? We are just touching around 4 trillion. To reach that, we have to become 40 trillion. We have to almost grow 10 times. Today's US is only 35 trillion. That means we will have to overtake even current US. Look at the task in hand. On the other side, we have 1 crore plus children writing board exams every year. Who will create job for them? You think the technology companies are going to create, or the manufacturers company is going to create? This retail sector and the MSME is the only solution to do that. Even this, 13 million, assume that they add 1 job in another 3 years, and so that the 6 crore retailers on the MSME, they will address and create job at the local. This is the solution. That's the reason I'm telling it's so important that we all work together, create that environment. If we don't do that, it's the larger national, agenda of taking, country to a developed nation. So this is that an important responsibility all of us have together. I think a lot more we can work together.
Subhash, you had a question to Shaji?
Not really. Just wanted to, for the benefit of some of the audience here, in our business, mobile retailing, today, just like cars a few years ago, all mobile phones are sold on EMI. And it is up to 24 months EMI. And at zero interest. Absolutely zero. No handling charges, no processing fees, nothing. And 55% of Sangeetha's turnover happens on EMI. So that's again, most of these NBFCs, and all this is through NBFC. Bajaj is obviously the leader. And there are about a dozen NBFCs. And what happens is, the other beautiful thing is, all these NBFCs are not available in the online space. So that's again a major plus point for the brick and mortar guys.
Since you mentioned that point, I'm just thinking about it from an opportunity. We know that in India, average per capita consumption is much lower, like I mentioned earlier, versus China, versus Indonesia, versus Malaysia. So for retail to grow, we obviously have to increase average per capita consumption. Second is, in terms of the average household debt as a percentage of GDP, we are also much lower compared to the US.
Yes.
In the US, it's roughly almost 100% of GDP is actually average household debt, and we are about a third of that.
Yeah.
Which means that Indians are also averse to borrowing.
Yeah. In fact, that is the reason my favorite sentence whenever I visit stores is, You know, because I'm asking them, why is it not that 80% or 90% of the business is happening on finance? Why only 55%? And in front of my eyes also, I see many a customer saying, no, namak bedappa, I will swipe full or I'll pay full. I don't need the EMI. No, sir, it's 24 months, it's zero interest. No, I don't want that jhanjat of EMI and all that. My favorite sentence to my team always is, sir, either you become rich or you make me rich. Why do you want to make Apple and Samsung rich? You don't even know where they are. They have anyway budgeted 24-month cost of interest for you. Why do you want to make them rich?
So, you know, so
and nobody, and the minute you say that, it actually touches the soft part of you. You know, you don't want to contribute to somebody's riches, right? So immediately he says, okay, give me.
So the larger challenge I always see in India, and which Shaji was mentioning, is that to assess credit worthiness, there is very little data available, and once assessed, if unfortunately something happens and that customer falls off from that magic band of what he's supposed to be in terms of the CIBIL score, to get back is often a huge problem. So how much can we do in terms of using technology to be able to create a better assessment which goes beyond the standard creditworthiness assessment?
At least in our industry, again, NBFCs have figured out, of course, I think now RBI is questioning that. NBFCs have figured out blocking the phone. They block the phone. It becomes just a paperweight.
I think
if you default on your EMI.
I think the question is on two sides. It's on how do we decide to lend, correct? How do we use data? See, the way which I talked about in one sentence in the past that we used to be a data poor country, we have become a data rich. The DPI, okay, the digital public infrastructure has been the catalyst for creating that. Now, for example, in retail and the consumer, retailer today, lot purchase the GST, they leave a footprint on the size of the business they have purchased and all, goods they have purchased. And there are clear industry margin we are able to arrive. Okay? For example, somebody who sells, like sir said, the mobile. So we know, we have arrived at a level, what is the industry margin? If there's a turnover for the retailer and there is a, we can understand this, margin. In that we do a, fixed obligation to income ratio and then we are able to lend. Very much possible. Second is the cash flow through the, UPI. So we do know, reasonably arrived or in discussion with the promoters, that what percentage is coming through this and off. So we are able to really judge. All these are now digitally available. The beauty is all these are read by machine now. I talked about, in our merchant loans now, only the retailers we finance there. Anybody uses any of the UPI, we have partnered with few of the large players like the Bharat Pay and the, Phone Pay. You click there, less than 3 minutes. Entire data is processed and the loan is disbursed into his account when no human intervenes. Because we have already made a logic behind it and a credit model, and we do that, which includes this credit history, turnover, industry margin, shop, how many months it's been doing, stability. So a lot is happening. Okay, that's how the credit penetration is increasing and the financial inclusion is definitely enhancing, which is going to really propel the whole retail sector substantially. And as you said, the per capita income which is going up and sub 3,000 rupees, hopefully, by the time we become a developed nation, 15,000 plus, that is going to drive consumption.
Sure. So I know we're running a little short on time. What I'd like to do is just throw open this discussion to the audience. If you have any question of the panelists, please just raise your hand, mention your name, and ask the question. And you'll then get an opportunity to address your question to anybody here. So if somebody can just take the mics around to anybody who has a question. Any questions from the audience? Can we have the lights on in the room, please? Yeah. Now we can see the audience also. Somebody has a question there. can get a mic to the gentleman.
Good morning. My name is Anil Karambaya from CKC Group of Jewelers. I beg to differ from Biju's statement that there was no established brand in Commercial Street. We've been there from 1859. Thank you.
Okay, so that was a clarification. I withdraw my statement. Okay. Any other questions? Okay, so then I can switch back to the panel again. One of the questions I'd like to ask rather, in the theme of the panel discussion,
Profitability.
which is retail reset. How do we ensure that our businesses will sustain into the future? Just maybe a couple of lines from each one of you. How do we ensure that our businesses sustain profitably into the future? Today's profit might not be the profit of tomorrow, so consequently our existence itself might be under question.
Yeah.
So, and when you think about this question and answering it, it's not just about what you're doing today, what you might need to do tomorrow. Maybe there are adjacent categories that you might be thinking of. There might be new ways of running your business.
Yeah. So very relevant in Sangeetha's case, we started as a gramophone record seller and now we are selling smartphones. So after 51 years, we wouldn't have survived if I was selling gramophone records. Number one. Number two, from smartphones, I thought from, mobile phones, can I get into two-wheelers? Electric two-wheelers is what I tried my hand at a couple of years back. But I realized that the margins are too low, worse than mobiles. So then I said no. And consumer electronics, like you touched upon, I thought I had bid goodbye for, for good. Because I come from consumer electronics. After gramophones, I sold televisions, white goods, brown goods. I thought I'll never go back to it again. But now we have resumed all consumer electronics. But with my son, he now says a lot of, again, whatever Kumar and you touched upon, AI. So AI is the in thing, everything. So we have, for example, earlier you used to buy a door lock or a door handle from a hardware store. Today we sell handles, door handles, because it has artificial intelligence, or rather, you can use your thumb impression, you can put a code to open the door without the keys. Then we created a record recently, 3 months ago, by becoming All India highest seller of dash cams. We realized that dash cam nobody is focusing on. So we did the highest ever. Similarly, even though during COVID this RoboVax became popular, the vacuum cleaner, because of absence of maids, for some reason the vacuum cleaner is still not sold in that number. Again, 1 month we picked vacuum cleaner, RoboVac, and went after it. Now, the last month we are going after the goggles, the smart glasses or audio sunglasses. So we have to move with the times. Apart from moving from brick and mortar to online to quick commerce, you have to move with times. We have to value add. The other thing that is part of our theme for this session is, I think, profitability. So profitability, and again, one fine day I woke up with this thought, why do all these gentlemen do not have a bargain customer? Lifestyle, nobody bargains. Soch, nobody bargains. But in Sangeetha, everybody bargains. Why should it be so? Why should it? And these people are sitting on huge margins, 30-40% margins, 50-60% margins. We are working on single-digit margins. Very few brands give us double-digit margins. But only we are the ones who get customers who bargain. And we also have online too. Just now we discussed about online also. So I took a very, one of its call in the entire country. In fact, just the other day, I got to know there are 1 lakh retailers retailing mobile phones in the country. And at least regular, every month billers. There would be much more than that otherwise. So Sangeetha took a call on April 1st, incidentally, that we will not give a single rupee discount in the store. And what did I do? And what was the discount anyway? The discount empowerment was 2% to the store guy. And I really don't know whether indeed the 2% was going to the customer. Half of it might have been going to his pocket also, right? So there is, we are artificially creating, lack of integrity also by giving this empowerment. And customer also feels, what is it? I walked into one Sangeetha, there is one price, another Sangeetha, another price. So we said 80% of that will be given back to the staff. So I paid incentives, what I paid in the previous financial year, 1 year, in the month of April. 3 crore plus was my incentive to the staff. And we have not dropped 1 rupee business. My customer experience has gone several notches up. So this is a beautiful lesson I learned, and I've been telling all my competitors. Of course, I'm openly talking here, and some of my friends may be here in the industry. It's okay. I actually, in fact, just the other day, my Samsung key account manager was talking to me. Sir, thanks to you, Purvika has improved their margins. Big C in Andhra have improved their margins. They're all happy that, Sangeetha has taken this stance.
Sure. So Manu, if you were to think about the 40% margin that you get, as Subhash said, how do you expect that to sustain?
I think the single most important thing today for survival of every store is the same store growth. If you can't do that, your salaries are going up, your rentals go up 15% every year, 3 years, 5% every year. If you can't do that, then your profitability of each store keeps shrinking till you reach break even. And then either you have to hope for something to happen to push the sale up. It may be a renovation of the store, maybe a makeover, something has to happen, or the mall picks up, the high street picks up. If that doesn't happen, then it is just a downward spiral, and you'll have to eventually close the store. So our focus is entirely on same store, like-for-like growth. Unfortunately, I think as an industry, the last year has not seen much of that. For us, about 60% of our stores have seen a growth, 20-30% have seen a degrowth. I don't know how it is for the industry. And the other thing is that, see, there are so many of us here. When Retailers Association send out this form asking for a survey, the Monkey survey, we get about 30 or 40 responses. And these responses go into the press, the government, the industry. Everybody thinks that this is what is happening. But I really feel that 40 responses out of so many millions do not represent the truth.
Yeah, one line I would like to add. Again, I'm sure all of us are facing the same problem. Attrition is a huge challenge in retail, especially. In fact, the Swiggy, Zomato delivery boys get paid more than what our guys get. So one of the answer we found in what I did in April is we said hereafter, forget attrition. There would not be any attrition with the sort of incentives that we are paying. Second, every month, first week, we will say thank you to quite a lot. Whoever is not growing with so much huge incentive, 3 crore plus incentive in 1 month, one Sangeetha is paying to its only retail staff. In fact, my head office people are feeling why I also want to go and work in the store. So that also we are answering. So same store growth gets answered somewhat, but we have to, it's still work in progress.
Okay. I think we as a nation, okay, India, one of the real challenges is per person productivity. We've always been challenged, not only in retail, across various sectors. Productivity is a challenge. I think sometimes I feel is more customer per customer is thoughtful for a relevant US trade. I think there are a lot more can be done. We have had a lot of examples of our consumers, our retailers. We worked alongside and made product expansions. Okay, so just to write in one line, as a nation, we need to deal with per person productivity. It's a challenge because costs are going up. The second is more customer per customer. Are we able to travel and generate more revenue from the same customer? Because to get one another customer is very expensive and losing is even more. So those are two lines which I wanted to add as a...
I think three things. I'm not getting into the operational things of how to do it, but I think from a capability building, if each of our brands are to be relevant even 20 years down the line, I think three things we need to focus on. One is, bulk of our revenue today comes from the brick and mortar business, at least in the fashion industry. More than 80-85% of the business comes from brick and mortar. I think we have to develop our capability to start selling from a phone instead of a 50,000 square feet or a 2,000 square feet store. I think that capability, it's not about a digital marketing team, it's about the entire company, you know, right from the merchandiser to the buyer to the designer. When they're developing product, they have to think, how is this product going to look on a very tiny phone? Because now all of us are used to presenting it in grand mannequins and, you know, lovely stores. I think that's one big capability we have to build as an organization. I think the second is your supply chain. Supply chain is becoming more and more complex. International trade dissimilarities are only strengthening or only increasing. Complexities are only increasing. For us, especially the apparel and the fashion industry, now with trade embargoes coming on Bangladesh, Sri Lanka, China, so it's huge impact on us. So we've got to start thinking, how can we create products even cheaper? For example, a lot of people think inflation is 6%, so your product cost has to increase by 6%. Unfortunately, the consumer is not willing to pay 6%, even though the inflation is increasing by 6%. So how can you, 10 years down the line, how can you make the same product at the same price that you were making 5-6 years back? I think that is going to become the key for any organization to be relevant and successful, because India's per capita consumption is what it is, and it has not grown significantly. It may not grow very significantly 10 years down the line. So cost is going to become very important. So organizations that can win supply chain and cost of production will be the winners. I think, and third, not many products change after years and years, but in fashion, products change every 3 months. At least in lifestyle, what you see today, you will not see after 3 months when you visit a store again. So how can you innovate every month, every 2 months? Your designers, your merchandisers, your buyers, their ability to churn innovation, their ability to bring in new products to the consumer at lower prices, but superior quality. So it's an oxymoron, but it's something that we need to do. There is no choice. That's the journey we are in, and hopefully that should succeed.
Sure. So thank you very much, gentlemen. We could continue this discussion for much longer, but I know we are well beyond our time limit. So thank you for sharing so generously, and huge round of applause to all of them for the kind of work that they are doing.